Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a nippy, cold Wednesday morning. It's good weather here in Bombay. The air visibility, I'm not very sure, but I think it's certainly better than our Delhi-eyed viewers who are watching us. Well, not making you guys feel bad, but a little better here in Mumbai this morning. We're coming to you from the CNBC TV 18 Motilal Oswal studios. I'm Prashant. With me, my colleague Surbi and Nigel. Guys, hi, morning.
Hi, morning.
Prashant, nippy and cold for someone who spent a considerable time in Delhi.
Brought up in Delhi.
Yeah, nippy and cold. Now the transformation is complete. Here is a Bombay boy speaking. But yes, it is pleasant weather, no doubt, and we'll take it with both hands. Hi, Nigel.
Well, good weather for a Bombay boy.
Yeah, it's cold.
I normally am very cautious about talking about it being nippy because I know both of you have spent a lot of time in North India. But I like it, Prashant. Even I'm feeling a little nippy, cozy. But have to make it to the studio, and we've got markets to look at last few days in this year. So let's get straight to that.
It's the weather when you can sleep in, huh?
Oh, I love it.
That's a tough one, the wake up in the morning.
Absolutely. Well, take it from the top, right, in terms of what you need to know as we begin another session here. It basically got the big story being oil. It's not equities, it's not yields, it's not what Trump said. Maybe it is what Trump said. Maybe in the last, half an hour, 1 hour or so, he's basically put out a Truth post. But the fall in oil is, I think, going to, because it's in the 50s handle now, and 50, so WTI is around 55, below 55 for the first time since February of 2021. Or Brent oil is down 3% last night to about 58, 59. I mean, it's the levels, I think which get you attention, right? You're not suddenly talking about being closer to 70. You're talking about being, in the mid-50s now, and maybe on the WTI below 55. So concerns, of course, around oversupply as we head into 2026. We've heard that from OPEC and their estimates. And, of course, there is, as we've highlighted, right at the beginning of this week, Zelensky dropping demand and ambition to join NATO ever. And I think that's a big deal. So that kind of is clearing up the possibility of at least talks and Russia coming to the table. It's going to be Russia's decision whether to accept terms or not. Because it's in a stronger position right now. This morning, and that's what I said, right? It is some of the big story, of course, is what Trump has said also. Oil prices are up a little bit. They're ticked up 1% on President Trump's orders for a Venezuela blockade. Venezuela, mind you, is a big oil producer, one of the largest oil producers outside of the Middle East, outside of Saudi, etc. And there has been, this military build-up around Venezuela that President Trump has orchestrated over the last, actually it's not very old, over the last 1 month, I would say, right? And I just want to quickly read out what President Trump has put out in his in that post. He says the Venezuela regime has been designated a foreign terrorist organization. Therefore, today, I am ordering a total and complete blockade of all sanctioned oil tankers going into and out of Venezuela. So, that's the crux of it. It's a much longer post, and we can talk about this a bit in detail. But that's another mix, right? As you come closer to figuring out whether Russia, Ukraine pipes down and the war stops eventually, will it be have a calming effect and a significant impact on oil prices on the downside? There's something else which pops up, and this is Venezuela this time around. So more of this later, but that's a developing story. As I said, it's a very large and important oil producer. But the point is we'll have to see exactly how much of oil was reaching global markets, how much of it was basically, because a lot of it was already sanctioned. The actual impact of this blockade, what President Trump has essentially ordered, we'll have to see. So that's oil, right? But in any case, lower oil is great news for a big oil importer like India. Rupee, for example, it's all connected. Oil price, rupee is slid past 91. We've gone from 90 to 91 in about 10 trading sessions. But think about it. Russia-Ukraine sort of conflict settles down automatically. Hopefully, that 25% penal tariff goes away and we get access to cheaper oil and without President Trump's ire in that sense. And of course, I mean, it has a calming effect on the rupee as well because of the trade deal and an agreement, etc. So it's all one big linked thing as we look at the next few months or so. US equities closed mixed. S&P down about a quarter. Nasdaq was up a little bit. You had the jobs number which came through. I mean, the November number, jobs added were about 64,000. Expectation was about 50,000. But unemployment rate rose to 4.6%. It's the highest since 2021. Not very much move in terms of macro markets. The 10-year was down about 3 basis points on the yield. 4.15 is where we finally left off. And by the way, the jobs data has not done very much to change market expectations for 2 more Fed rate cuts, that is in 2026. I'll just tie in and look at the levels quickly. So the downside level is, and it's not changed basically, but despite yesterday's very sharp fall on the Nifty Bank, and of course broader markets which fell 1% as well, 25,750 is where the support. It's not a moving average or anything, but it's a cluster of support, 25,750. And 58,850 is that level on the Nifty Bank. So we are closer to it as of yesterday's close than we were day before yesterday. And of course, on the upside, the 20 days have been acting as a bit of a, level, 26,028 as of yesterday's close on the Nifty and 59,299 on the Nifty Bank as well. So that's where we stand with, yesterday's session and looking ahead into this Wednesday's session. 20 points lower on the GIFT Nifty. Nigel is now standing by with what's happened on the F&O side, positioning, etc. Nigel, over to you.
Well, that's a point well noted, Prashant, with regard to the Brent crude prices still hovering at very, very low levels. From an India macro perspective, that's good news. And you'd like to see some stability on the rupee. And one would believe that maybe, in fact, the rupee could peak out, at around this 91.5, 92 odd mark, given that we'll get into a seasonally stronger period in the next quarter itself. Getting back to the equity markets, that in yesterday's trade, the final tick was at the low point of the day, but it was the weekly expiry as well. So the bulls will hope that some part of this is an expiry-related move, and that could reverse. So that's one factor that we'll be tracking. Besides that, a mild positive that I would look at it. Yesterday, yes, the Nifty ended down by close to around 160 points odd. The India VIX still is at very, very low levels. So that's telling you that the fear is still not in with regard to the headline index itself. So we'll keep an eye out on that. Nifty cooling off, VIX cooling off, that's normally not such a bad thing. And the Nifty Next 50, that as well ended lower, but that has been a relative outperformer for the last few trading sessions, which is heartening actually because the broader markets have absolutely got pummeled. Moving to the institutional data, well, in yesterday's trade, there was something that happened in terms of the flows that hasn't happened earlier. And it's not happened since the end of October because the FI selling outweighed the DI buying, and the institutions, they turned net sellers for the first time since the 30th of October. This is the FI and the DI data put it together. Moving to the futures data, well, the FIs, they added shorts, both on the index as well as on stock futures. And that's clearly evident on the screen. There is some unwinding of long positions and some shorts that are creeping into the system. The FI short positions now at around 91%. So they're getting to the upper end of the range, normally at around 92% or thereabouts. That's where we've seen them peak out. And at 91% as well, they're aggressively net short on the index itself. You need some good news, whether it's a trade deal, whether it's something on the domestic front. That's what could cause these shorts to get a little bit, a little bit uncomfortable. The PCR has moved down to around 0.9. Remember, it was at around 1.2 odd. So to pull up, the strikes that were fairly active in trade yesterday, 26,000 call, very active, 25,900 call, very active. And on the downside, this 25,900 put as well was active, and the premium was ballpark around 150 rupees, which if you put that in, then you get your levels. Support, 25,750 going by the options data, and resistance, 26,050. That's the near-term resistance. So, that support level has been moving down as the week has been progressing, and that's the important mark. You don't want that to break. In fact, if you pull up the Nifty, the 20 and the 50 DMA, that perfectly tallies in with that range. So on the upside, you have the 20 DMA, which is at around the 26,050, and on the downside, 25,750. The Nifty Bank, well, in yesterday's trading session, it showed some weakness. In fact, it closed below that 20 DMA, which is a bit of a worry. So you'll want it to get back above that because that's where the action is. That's where, the bulls believe that we'll see a bit of a fight back. So the Nifty Bank needs to find its form. Support where it's been bouncing off late, 58,500 on the upside. That's the crucial resistance mark. So let's see whether or not the bulls can fight back because yes, it appears it was more an expiry-related downtick that we did see.
Oh, absolutely. So let's see if the bulls can find their feet today or not. By the way, just a couple of interesting points. Yesterday, after that jobs data came out, the U.S. labor report, the dollar actually fell, and the dollar is close to a 2-month low now. And the dollar index has come off so significantly. 1 month back, the dollar index was at 100. Yesterday, after the data, it fell to 98.20. This morning, it's recovered a little bit. But this at a time when, the Indian rupee has been doing its own thing, absolutely paying no attention to the overall dollar weakness and sliding even more. So that's something that we are going to keep an eye out on. And by the way, after the jobs report yesterday, there was some buying in gold because all said and done, October, there was a fair amount of job loss. The November numbers were better than expected, but it seems that, there is a debate out there. So yesterday, gold rose a bit. This morning, silver, pull-up silver is up 3.5% this morning. So that excitement in the precious metal space, that continues. There we go. Look at international silver prices, 65.53 on the screen now. Quite a move over there. Asian markets are fairly mixed. Let's pull up the ones that we have for you and then the implied open. Again, not too much of clarity after the jobs report yesterday. So you got some of them like the Nikkei, the Hong Kong market, mainland Chinese markets are flashing a little bit of green. Does that mean that we'll bounce back? Let's see where the gift open is, where the gift nifty is and where the implied open is. After yesterday's drubbing, will we continue to be in that range? Right now, it's anyone's guess, about 18 points lower.